we are as an auditors, as per SA 700, we are not required to report on the effectiveness of the internal control of that company. And because we are not required to report on effectiveness of internal control, recently the Institute of Chartered Accountant has made an amendment in SA 700 that please add these lining in your SA 700 report in the auditor's responsibility. In those lining it is already written that we have considered the internal controls, but we are not, our audit process was not designed for that purpose that we can tell that whether the internal control is effective or not effective. We have not conducted our audit for that purpose. But certain deficiency came to our knowledge relating to internal controls, and we think that they are of interest of the governance, and therefore we are reporting it. So, what will be the reporting? When you want to report those significant deficiencies in internal control, the question arises that to whom to report, what are the significant deficiencies in the internal control, and how to report. So, for that purpose, auditor needs guidance. But I would like to add here that the new Companies Act has come into force. Chapter 10 relating to accounts and audit has also come into force from 1st April 2014. And as per this act, the auditors is required to report on effectiveness of the internal controls. Perhaps. Now, the observation which we are reporting under SA 265 now has to be reported in the main report of SA 700. But till today, it is not. We are reporting under SA 265, and what is that SA is? With this background, I hope you will understand it. What is the purpose of this standard? Name of the standard is Communicating Deficiencies in Internal Control to those charged with governance and management. And that with this background, I hope you will be understanding why this is standard. The scope of this standard is, this standard establishes a standards and provides a guidance on communicating matters related to entities' internal control over financial reporting identified in audit of financial statement. It is applicable whenever an auditor express or disclaim an opinion on the financial statement. Whenever an auditor expresses or disclaim an opinion on financial statement, whenever he expresses an opinion he always expresses in SA 700, or he may be disclaiming an opinion which we will discussing on SA 705, and at that time he might have noticed during his audit process there are certain significant deficiencies in the internal control of this entity. The question arises, what are those significant deficiencies in internal control? Whether all deficiencies in internal control should be reported under 265, or because this standard talks about that only significant deficiencies in the internal control should be reported. For small deficiency, you have another communications. We will be talking under SA 260. But for significant deficiencies in the internal control, this standard has to be followed, SA 265. And what is deficiency in internal control? And that is a significant deficiencies. A deficiency in internal control exists when the design or operation of control does not allow management or employees in the normal course of performing their assigned function to prevent, detect and correct misstatement on timely basis. So that's the deficiencies. You have a system of internal control And if that internal control does not, why we formulate an internal control and internal check? Because any mistake should be pointed out in the process on a timely basis. And if that internal control is not able to detect that particular misstatement at the time of occurrence or recording in the financial books, then means there is a deficiency. Take for example, you are making a payments of a certain amount. The procedure is that for making a payment for expenditures, you have a approval of those expenditure, receive the invoice of the vendors, the support for it, and make a payment. When you make a payment, you only compare it with whether you have got a sanction and then make a payment. One person prepares a check and signing authorities sign it. Instead of approval of 5 lakhs, he wrongly wrote 5,50,000 or 5,80,000 in the check when he is preparing. There is no internal control system which says that the work of that person who is preparing a check has to be checked by the another one before it is signed by the authorized signatory. There is no check in between. There is no such this system. And if he commits, the preparer or person who prepares the check, instead of 5 lakhs, he prepares 5,50,000. And finally, it is signed by the authorized signatory to goes outside. There was a mistake of 50,000 there, which will make a misstatement, in the financial statement, if you feel if that is of that importance. Or even these small mistakes may constitute a material misstatement. Means there is a defect in the internal control system. It is not able, this your existing internal control system is not able to detect such type of mistakes, and therefore there is a defect in this internal control system. You have to rectify it. Internal control system, if it is so, then you say that whenever the check preparer prepares the check, it should be checked by another person, and whose responsibility is this, to detect such type of mistakes. So you requires there is a certain defect in designing the controlling system, and so that, and it is not able to detect such type of mistakes during the process. So these are the deficiencies of internal controls. Deficiency in design exists. Control necessary to meet the control objective is missing. An existing control is not properly designed so that even if the control operates as designed, the control objective would not be met. Take for an example, this is the deficiency in internal control over the financial reporting. As per the financial reporting framework, you have to report the traveling expenses of the directors, board level directors, in the financial statements separately. Suppose this is the requirement. Now, you should have a certain system, you should have designed the system while recording the transaction in such a way that you can identify the traveling expenses on directors, they are incurred by the directors of the companies. Your system says that traveling expenses, you have got only one head, traveling expenses, whether they are director, non-director, or anybody, you are putting one traveling expenses head. At the end of the year, there is a requirement, what is the amount of directors' traveling expenditures, you write it separately. Then from where you will come to know? You say yes, again see the all the transaction during the year, and then identify which is directors' traveling expenses. I think that exercise is wrong. If it is the reporting requirement of the financial statement, you should have an internal control designed in such a way that automatically at the end you know that what are the traveling expenses incurred by the directors. And for that purpose, if you create a new head in accounting, that traveling expenditure towards directors and others. And at the end, when you have to report that what are the traveling expenses incurred by the directors, you have an accounting head, you have a system in recording of the financial transaction that from the very beginning itself, and at the end you will automatically come to know from the financial records. So that's a system which should be done, but you have not followed that type of accounting, and you have not designed your accounting recording system in such a way that you come to know a figure automatically at the end of the year. So that's a defective system. A properly designed control does not operate as designed. Sometimes you have designed a control system properly, like that as per your manual of accounting, it is written that whenever you are incurring a traveling expenditure, you have to classify it that traveling expenditures are of others or directors. But the person who is in charge of it, who is recording these transactions, is not classifying it. So the system is properly designed, but it is not being operated, not being followed as designed. The person performing the control does not possess the necessary authority or competence to perform the control effectively. You have designed a system correctly, like I told you that for traveling expenses of directors, you know that the travel expenses of directors should be separately recorded, others should be separately recorded in the financial books. It has been told to the persons also who is responsible for recording of the traveling expenses in the financial books. But what says the person performing the control does not possess this necessary authority or competence to perform the control effectively. Does not possess the necessary authority. He has not been given a list of the directors. He has no authority to ask that who are the directors of these companies. He has not been being supplied the change in directors. So if these are not, he has no authority, and sometimes he does not know that who are the directors, what is the meaning of it, why we have to do it. He has no authority, he has no competence, he has not been made understood why this is required, why you have to do. So that may be one of the defects in the internal controls. You see, here we will be talking about the two deficiencies. One is called a material weakness in internal control and the significant weaknesses in the internal control. What is the requirement of this SA 265? That significant deficiencies in internal control should be reported as per SA 265 to the persons who are in charge of the governance. It is not the material weaknesses which has to be reported as per SA 265. Maybe these material weaknesses are the matter of interest or matter of reporting under SA 260, which we will be discussing. Now, what is material weakness? Is a deficiency or a combination of deficiencies in internal control such that there is a reasonable possibility that material misstatement of the entity financial statement will not be prevented, detected or corrected on a timely basis. The same one, because there is a deficiency in designing, there is a deficiency in compliance, or they are not being operated, the instructions are not followed, there is a design but not effectively followed. So due to that there may be some small mistakes which may form. If you add up all those mistakes, they becomes material. So that's a material weakness. If you go to the significant deficiencies, what it says, a deficiency or a combination of deficiencies, same as we are talking about the material weaknesses, in internal control that is less severe than the material weaknesses, yet important enough to merit attention of those charged with the governance. Merit enough to those charged with the governance. Maybe say that less severe than a material weakness, yet important. You have to, yet they are important. Yet they are important. And is a deficiency or combination of deficiencies? Again, it's a matter because this there is a step differences between this one. So it is talking about that there may be a cases of material weakness or the significant deficiencies, and that merit attention of those charged with governance. Merit weaknesses those charged with governance. You have to report those under SC 265. What is the auditor's obligations? Identify the deficiencies, whether the deficiency identified are significant, communicate in writing those charged with governance, and communicate to management. What you have to identify first, the deficiency, you have to consider whether those are significant deficiencies, and they have to be in writing to be communicated to those charged with governance or management. Now the question arises, who are those charged with governance? What does it mean? What do you mean by management? Management, the governance, you can say simply that sometimes it will be difficult in a small companies to know who is management, who is in charge of governance. Governance, if you go to in a structure of a listed companies, which is a very big company, the person who are in charge of the governance, maybe they may be board of directors, audit committees. These are the persons who are in charge of governance, who are not basically not seeing the operating. They are not related to day-to-day operating of the companies. The persons who are related and who are doing a day-to-day, who are in charge of day-to-day operating of the companies, they are the management. So that's a step difference. There is a governance. Governance is person in charge of governance is somewhat at a higher level, or the persons maybe that the management may be lesser level at that the governance. As I told you that in case of a listed companies, the governance may be board of directors or the audit committees. For the purpose of management, suppose there is an executive director who is a director in charge of finance, and he is an executive full-time director there. He will be part of a management because he is also concerned with the operating day-to-day operation of the companies. So question is that there is a requirement of reporting to the in charge of the governance, but sometimes it becomes difficult who is in charge of governance, who is in charge of management in a small companies. Then at that time the auditors can have an understanding or with the management or governance that I will be reporting to these people as a governance person or the management persons. Now that's the meaning of governance or management. Now what is the contents of this report? When the auditors reports a significant deficiencies in internal controls to the person charge of the governance. Auditor's consideration of internal control was to express an opinion on the financial statement, but not to express an opinion on the effectiveness of entity internal control. Dear student, it is clearly written in SA 700. The report which the auditor's opinion, auditor's report, it is written what is the auditor's responsibility. auditor responsibility is not on to report on operating effectiveness of the internal controls. It is written in SA 700 format of reports, auditor's responsibility. But nevertheless, because our standard and auditings are designed in such a way that ultimately they have to be effective, the outsiders or insiders must rely on our reports, and for that purpose we have designed, in spite of the fact we are not doing the audit for the purpose of to test the internal control for its effectiveness, we are reporting on the true and fairness of the financial statement, and all audit processes are designed in such a way that which will give us a sufficient and appropriate audit evidences to express an opinion whether these financial statements are true and fair. These auditing process which you are following are not designed to give an opinion on the effectiveness of the internal controls. And therefore, when you report under SA 265 to the person who are in charge of governance, you must make clear to him also that our process, audit procedures which you followed was not with the objective to test and to express an opinion whether the internal control of your company is being followed effectively or not, they are operating effective or not. That was not our objective for designing this audit process. But during the audit process, we came to know the significant deficiencies in internal control, and that's why, and we thought that you are the person in charge of governance, it will be a matter of interest to you, and that's why we are reporting it. So this should be written in the reports. Include a statement that indicates the auditor is not expressing an opinion on the effectiveness of internal control. As I explained to you now, that our audit process is not designed for that purpose. Our audit process was designed to express an opinion whether the financial statement shows the true and fair view. The auditor consideration of internal control was not designed to identify all deficiencies in the internal control that might be significant deficiency or material weaknesses. Our audit process was not designed to detect such type of deficiency in the internal control. But whatever we have designed the audit process for the purpose of expression of opinion on the true and fairness of the financial statement, during that process we came to know these significant deficiencies. So that should be expressly written in this letter. Identify the matter that are considered to be significant deficiency and those are considered to be material weaknesses. Both has to be identified. The communication is intended solely for the information of use of the management, those charged with the governance and others within the organization. You have to write in that letter to the when you are writing these significant and material weaknesses in the internal control to the charge with the governance, you must write that these matters are being reported to you for your use only. You can't make it a public. And it is not with the intention of to make it a public or to anybody can use this. No. Anybody who can use it is our audit opinion, which will be giving you, and when you are expressing your opinion whether the financial statement are true and fair, that opinion and that report can be used by anybody. There is no restrictions on using the report, and we are not writing it. When you want to restrict your report that should be used by some particular section of the society or some particular persons, so you have to write the last paragraph about the restrictions. We don't write it in our audit report, but we do write in the SA 265 letter given to the persons who are in charge of the governance. And then you have explained all the material weaknesses, significant deficiencies in internal control, and then explain them. This is one of the letters which is a somewhat a format given in the SA 265. It's a suggested format, and the auditors can modify it somewhere, but the basic structure of the letter must be the same. It says that in planning and performing, this is addressed to the board of directors, and board of directors are considered here the persons who are in charge of the governance. In planning and performing our audit of financial statement of ABC Limited for the year ended 31st March 2000, we considered its internal control in order to determine, this is important, we considered its internal control in order to determine our auditing procedures for the purpose of expressing an opinion. Why we consider the internal control? For the purpose of expressing an opinion. We didn't consider the internal control for the purpose of expressing an opinion on the effectiveness of the internal control. We consider the internal control only for the purpose of expressing an opinion on the financial statement of whether they are true or fair. So that's the more material part in this communications under SA 265. Purpose of expressing our opinion on the financial statement and not provide assurance on the effectiveness of internal control. However, we noted certain matters involving internal control and its operation that we consider are of a sufficient importance to merit being reported as per standard 265 issued by the ICAI. And then you can report like this: what is the deficiency, what is the implication, what is your recommendation about it, and that should be given to the management. Please note that this report only addresses any significant deficiency identified during the audit, and if further testing had been performed, then more deficiency may have been reported. These are not the only deficiencies which are there in internal control. These deficiencies came in our knowledge while performing our audit procedure, which was designed for expression of opinion on the financial statement about its true and fairness, which was never designed to test the effectiveness of the internal control. So that should be clearly written and clearly explained to those persons. The report is solely for the use of management, and if you have any further questions, then please don't hesitate to contact us. So this report should not be made public, and it should not be published anywhere. It is designed for you only, for the persons who are in charge of the governance. So this is one of the formats for it. Dear student, this is the report. This is the SA 265. It's sometimes asking the questions. This is because this SA 265 is because at present the auditors is not required to give his opinion about effectiveness of the internal control. And that's why he gives, as per our auditing standard, to strengthen the reliance of the internal management on the audit opinions, on audit reports, this standard has been issued. But in the next year, when this new Companies Act will be operative, from the accounting year, starting from 1st April 2014, which will end on 31st March 2015, auditor has to report on the effectiveness of the internal control also in his main audit report. Perhaps at that time, these standards, SA 265, will be modified. And that's very important. The standards at present, questions are being asked. Only thing what you have to report here, that what is the purpose of it? Purpose is that you want to tell to the management and the person who are in charge of the governance that there is some deficiency, significant deficiency in internal control, and which you should be interested in it because you should rectify that one. And that's the SA 265.